In this video, I want to cover 3 investments that will likely do very well under the Trump administration. Because whether you like him or dislike him, the fact of the matter is he is the new president. So you might as well make money. So in this video, that's exactly what we're going to do. Hey everybody, hope you're all doing well. As always, my name is Derek and I got my degree in finance, so you don't have to. Let's get right into it. So before we even begin, let's answer a big question. How did the stock market, which a lot of people invest in, do under the previous Trump administration? Because we actually have history to go by this time around. And the stock market did pretty good. It rose about 67% during the previous Trump administration, which, without foreshadowing too much, if you perhaps invested in a broad index tracking fund like the SPY or the VOO, you probably will do pretty good this time as well. And that's because very rarely after a 4-year term, regardless of whether a Democrat or a Republican is in power, the stock market is lower. Most of the time it's higher. And I actually did do a video on this breaking down president by president for the last 50 years. So check that out if you're interested. Okay, now the first of the big 3, and it's actually cryptocurrency, which is actually kind of odd because in 2019, Donald Trump was actually very much against cryptocurrency, calling it based on thin air. But since then, his tune has changed and now he seems to be very heavily in support of cryptocurrency. In fact, he's stated that he wants to replace the head of the SEC, which is the Securities Exchange Commission, with a more crypto-friendly leader. And Paul Atkins, which was a previous SEC commissioner, who is well known for advocating for lower regulatory oversight on businesses, including cryptocurrency, has been appointed by Trump as the leader of the new Crypto Regulatory Task Force. Now, what is the main consequence of this? Well, investors basically expect a much clearer regulatory outlook for cryptocurrency. Because up until now, cryptocurrency has kind of remained in this gray area. Is it regulated? Is it not? Is it an actual security? Is it not? And because of this regulatory uncertainty, it's taken so long to get things like a Bitcoin ETF. So what does this mean for you? Well, first and foremost, you must remember that cryptocurrency, even Bitcoin, is still extremely speculative in nature, which means that if you are going to choose to invest in this market, not only do you need to do your own due diligence, but you must invest with money that you are comfortable completely losing. This is why when it comes to all speculative investments, you should limit it to a very small percentage of your overall portfolio. Yes, that probably means that you're not going to become a millionaire overnight when some random meme coin, like the new Trump coin, which actually was released on the Solana platform, goes to the moon. But it also means that when one of those meme coins goes to zero, you don't lose the place that you sleep in. Okay, so what should you do? Well, first and foremost, this isn't financial advice, but myself, I invest a very small portfolio, mostly in the major cryptocurrencies. That usually means Bitcoin and Ethereum, although Solana also seems to be gaining some ground, especially now that the new administration, they're releasing their meme coins like the Trump coin and the Melania coin on the Solana platform. So I would keep an eye out for those 3, and I would still absolutely stay away from meme coins and altcoins because they still are basically the Wild West. And if you are going to dabble in them, just make sure it's a very little amount. Okay, and what about for those completely on the other side? Those that are very risk adverse but still want some sort of exposure to cryptocurrency. Well, first and foremost, you're probably already exposed to cryptocurrency because you probably invest in major ETFs. And MicroStrategy, which is a company whose stock is part of some of those ETFs, is basically a pseudo Bitcoin ETF at this point. It is so heavily invested in Bitcoin, led by Michael Saylor, who is an extreme believer in cryptocurrency, that simply being invested in some major ETFs also makes you exposed to cryptocurrency simply by association. But if you're risk adverse, but you also want a little bit more exposure than that, then you could look at a traditional ETF that follows Bitcoin. These are relatively new and they basically do the same thing as just investing in Bitcoin itself. But for those that are more accustomed to traditional ways of investing, this is a good middle ground because you still get exposure, but you can trade it through your brokerage account. You can also get exposure through cryptocurrency by investing in crypto companies like Coinbase, ticker symbol COIN, which again is going to move very similarly to the cryptocurrency market. If the market does well, Coinbase is going to do well. And if the market does terribly, so is Coinbase. Ask me how I know. Okay, now right before we move into the second, more traditional investment that's probably going to do really well, without dragging this video out so much, a couple other things you need to know about Bitcoin is that there are only 21 million Bitcoin that are ever going to be minted or mined, which in a sense does provide some form of a hedge against inflation, which is why a lot of people call it digital gold. Do with that information as you will. Okay, now the second much more traditional investment that'll likely do well under the Trump administration is the energy sector, and more specifically, the traditional energy sector, like oil. And again, since we have history to go by, under the first Trump administration, oil production rose 28%, reaching a record 13 million barrels per day in 2019. Now, what does that have to do with today? Well, Trump's stance has largely remained unchanged. He is an advocate for oil production, and his famous saying, "Drill, baby, drill," highlights this. And there's a very good chance that he attempts to greenlight projects like the Keystone XL expansion, as well as rolling back incentives on renewable energies like electric vehicles and solar production. And when you combine this with looking at the expected global demand by 2050, you're looking at a roughly 50% increase in global demand. So when demand goes up and supply potentially goes down by eliminating or reducing incentives for renewable energy, well, then the oil and traditional energy sector will probably do good. And yes, that means individual stocks like ExxonMobil or Chevron, or index tracking funds in the energy sector, like the Energy Select Sector SPDR or the First Trust Natural Gas ETF. But with anything, there are risks. Remember, the energy sector can be volatile, and the rest of the world is pushing ahead with renewable energy. So not only is some of that increased global demand going to be met by renewables, but there might actually be tension between the rest of the Western world and the United States if the United States remains on traditional energy and the rest of the world pushes forward with renewable energy. Now, you can always hedge your risk by also investing in renewables. With that said, it is very clear where Trump's stance is on traditional energy like oil and natural gas, and simply because of that, plus the fact that he wants to reduce regulations on the economy in general, well, energy will probably do well. And now the third most traditional, most risk-adverse area that will most likely do good under Trump is the stock market in general. And while, of course, I'll give you an in-depth explanation, it can be summarized as this. Either Trump will improve the economy significantly, which will naturally lead to an increase in the stock market, or Trump's policies, which seem to be very inflationary in nature, are actually implemented, which will also lead to an increase in the stock market because stocks tend to do well in inflationary environments. And that simply has to do with the fact that inflation also means asset inflation. And the valuations of these companies don't necessarily change just because inflation increases, which means that if inflation does increase, say, to 3 or 4% per year, then those companies, all else being equal, will probably also experience a 3 to 4% increase in their stock prices simply to counter the weaker US dollar. So how do you take advantage of this? Well, you do something that everyone should be doing anyway, and that is by investing in broad, index tracking funds like the VOO or like the SPY, because these ETFs basically mimic the market almost perfectly. So if stocks move up, these will as well. And these should already be in your brokerage account or your retirement account because they make the backbone to most retirement plans. And if you really just want to set it and forget it, these are probably your best bets because regardless of what happens, as long as the world doesn't implode, and if so, I guess we have more important issues than money, as long as the world doesn't implode, these ETFs will almost certainly be higher in 4 years than they are today. And if for some reason they are not, they will most certainly be higher in 10 years. So when it comes to these broad-based ETFs and taking advantage of the stock market in general, if you don't want to spend the time to learn technical analysis and fundamental analysis, then it's probably best to just set it and forget it. But you also have to have a long time horizon, preferably 10 plus years at the very minimum, 5 plus years, to allow these ups and downs in the market to kind of equalize, so when it is time to use those funds, they are almost certainly higher than they were when you invested. Okay, but Derek, what about some individual sectors? Well, we already talked about the energy sector, which will probably do well, but another one that will most likely do really well is the tech sector. As I'm sure you've seen by now, a lot of the tech CEOs have kind of buddied up with Trump over the last few weeks. And I'm sure that regardless of whether they like him or dislike him, this is more a business move to try and get favorable treatment from the new administration. And Trump seems to be taking the bait, whether consciously or subconsciously. For example, he's rolled back protections and safeties on artificial intelligence, which most of these major tech companies are, of course, investing heavily in. And when you add on top of that, Trump, as well as the Republican stance of lesser regulation for the market, you have a perfect environment for increasing stocks, increasing tech stocks, and increasing energy, and probably increasing cryptocurrency. But that one I'm the least certain on, just because I've been around long enough to see how insane and volatile the cryptocurrency market can be. And an honorable mention, it's probably real estate. Trump is a real estate guy. He's made it clear that he wants to lower regulations when it comes to the industry to try and spur growth in our housing supply, which we have a huge shortage in. But lesser regulations also means that it's probably going to be a good environment for landlords. So if you have the ability to either purchase a home for yourself or as an investment property, it might be a good idea to do so because on top of everything else, supply for real estate is also extremely limited. And when you look at the forecasts, they are just increasing. There is no crash on the horizon. And yes, of course, there could absolutely be a black swan event, but we can't really prepare for that. So it's looking like real estate will probably do well in the coming years, and it deserves an honorable mention. So there you have it, 3 areas that are very likely to do well under the Trump administration. Again, from the most risky to the least risky, that is the cryptocurrency market in general. Next is the energy sector, and lastly is the stock market in general. And there are various reasons for this, but all else being equal, these 3 areas will probably do better than they else would have because of the Trump administration. If you like personal finance, world economics, and investing broken down simply, you are in the right place, so please consider subscribing if you haven't already. It helps the channel tremendously. And with that said, I hope you have a fantastic rest of your day, and I will see you in the next one.